Folks, here's the reality. Most traders are basically gamblers. They buy some stock or they buy some cryptocurrency or something else, and they don't really have a plan. They don't really have a system. They're just kind of buying it and holding on for hope. And then they wonder why, at the end of the day, they feel like they're just a victim of the system, like it's all rigged against them. Well, what if you could flip the script? What if you could be more like a casino? Think about a casino. What do we always say? We always say that the casino, the house has the edge. The house always wins. Why is that? Because they've literally rewired the game. They don't play with a game of hope. They're not hoping that they get a certain amount of money in. They're planning on it. They know through mathematical formula, through odds, through probabilities, they know that the more people that they have playing, the more money that they're going to make. It's just how it works for them. So what if you could do that as a trader? What if you could flip the script? What if you knew your numbers? What if you had your probabilities dialed in and you knew if I do X, Y, Z, and if I do this enough times over time, I'm going to win. And I'm going to see that steady paycheck. I'm going to see my account balance going up, and it's going to create something that's more predictable for you. Wouldn't you like to do that? A really fascinating statistic that Spiva has shown us over the last 20 years, 94%, that's 94% of so-called professional fund managers cannot match or beat the S&P 500. That is a staggering statistic. It should be printed on every billboard in America. And yet, those fund managers still get paid and they still have a job. How is it that those fund managers, 94% of them cannot match or beat the S&P 500, and yet they continue to get paid? And the answer is because they're not playing by the same set of rules. Today, I'm going to show you what I call the casino code. It's how to stop playing the game like a gambler and start playing like the house. When I was 16 years old, I got my first job, and it brought with it one of the greatest business lessons I would learn. I had just got my driver's license maybe a month before, and I was flipping through the classified section of the newspaper, just kind of reading different things, and I saw this offer to go work at a local amusement park selling ice cream. And I was like, hey, I love roller coasters. I love amusement parks. This sounds fun. So I applied and I went, I did the interview, I got the job. And my job was to push this big ice chest bicycle. It was a bicycle that had a huge freezer on the front with two wheels, and then it had a wheel in the back. And if I could ride it, I would ride it. But if you're going uphill, you had to push it, and had this big umbrella on it. And I did that for 2 summers, and I made pretty good money with it. But there was an interesting thing about it. These ice creams, they weren't cheap. They were cheaper probably than they are today. But the point was that this was an upsell for the park. And I kind of started to figure this out. They had all these different food vendors, and they had these different ways that they could make money. But there was a steady income that the park had, and that was the gate fee. Everybody paid the gate fee. It didn't matter if they came in for 5 minutes or for 5 hours, whatever. It didn't matter if it was raining. It didn't matter if it was sunshiny. It didn't matter if the roller coasters were off. The gate fee was the same. Everybody paid the gate fee. And I learned something there. No matter how much ice cream I sold or didn't sell, no matter how many fries are sold, no matter how many drinks were sold, the park still got the gate fee. That was their guaranteed income. And it was because of that guaranteed income that they were able to plan their revenues. Because of that, they were able to plan their budgets. And that taught me something interesting about business and about life. The most successful way to plan your money is to have a guarantee of the income. I said earlier that retail traders are, for the most part, gamblers. They're just buying and hoping. They don't really have a good system. They don't really have a good plan. And every step of the way, they're paying to be part of the game. And the way that the retail trader feeds the house is simple. Every trade, they're paying a commission. Maybe you're trading commission free, but that's been built in somewhere, probably built into the spread. There's a bid price, there's an ask price. The difference there is what the market maker gets to work with. And sometimes they feed that back to the broker. There are all sorts of fees that are hidden to the retail trader that they don't even realize are happening. And that's the guaranteed money. That's what the professionals figured out. That's what the house figured out. They figured out if we get more people to place more trades, we can make more money, not because we have to win. We don't have to beat the market. We don't have to do better analysis. We just need to churn more trades, because every time they turn a trade, what do they get? They get a little something, a little guarantee, a little profit. And that's what retail traders don't understand. There's two sides of it. Yes, you can make money swing trading. I've been doing it for 20 years, but there's another side of that trade, and that's the side where there's a guaranteed income. There's something that you know is going to happen over and over again. And if you can flip the table, if you can get to the other side of the table where you're getting that income, you're putting the odds in your favor even more. For years, we've heard if you want to make money trading, you need to follow the smart money. But who is the smart money? Is it the guy managing billions of dollars, or is it the person sitting at home trading on their laptop, their own little small retail trading account? And the answer is you don't know. But here's what we do know. For many, many years now, SP Global has done their SPIVA survey, and they've shown over time, 94% of so-called professional fund managers cannot match or beat the S&P 500. That's 94%. That means if you want to give your money over to a so-called professional and they're going to beat the market, you got to find a top 6% money manager. And, probably the truth is you're just not going to find that person. So the question I've always wondered is, if 94% are not matching or beating the market, how are they making money? How do these people afford their lifestyle? And the answer I finally figured out is they're not getting paid based on profits. They're getting paid based on management fees, based on commissions that they earn from the trades. And so they get paid because they have more money under management or assets under management. That's how they make money. And the more money that they have to manage, the more they make. Even if they lose money, they still get paid. So if you want to follow the smart money, maybe you should not follow their trades, but rather follow their paycheck. How is it that they get paid? And the answer is they have a mechanism that they get paid whether they win or lose. Now, here's the good news. Today, an individual like yourself, a person like me, sitting at home trading on their laptop, we can also structure our income in such a way that we can place a trade and we can get paid up front a little small percentage that's a guarantee into our account. It's like you flip the entire script. You become the house. You become the gate fee at the amusement park. It's the guaranteed income that you're going to make no matter what, win or lose. You get paid before everybody else. Now, insurance companies, they figured this out a long time before Wall Street did. And what they figured out is actually the key to understanding how the casino works. It's the code, if you will. It's the guaranteed income. Think about how an insurance policy works. All of us have insurance. Maybe it's for your automobile or for your home or renter's insurance or something. And you understand how the idea works. You pay a premium and they're insuring you against loss, right? So let's say you have $150 a month that you pay for automobile insurance, and you pay that every month, month after month, year after year, and hopefully you never have a claim, because your first plan, your plan A, is to be a safe driver and never have a claim. And guess what? That's your insurance company's plan A as well. They want you to be a safe driver so that you never have a claim, but they get to keep your premiums every month, month after month, year after year. Now, they run their risk analysis and they figure out, a person that has this gender and this demographic and all these, stats that go into it, what's the probabilities that they're going to have an accident? And if they figure that you are a good person to insure, they'll give you a good, fair premium, and they're expecting you to go out and not have a wreck, and you're expecting to go out and not have a wreck, right? What happens if you do have an accident? If you do have an accident, you file a claim, and they've planned for that too. They know a certain number of claims are going to be fairly small claims, and they know a certain number of claims are going to be mid-sized claims, and there's going to be a very, very small percentage, but there's going to be a certain number of claims that'll be a really big claim, and they've planned for that, okay? That's how insurance works. Now, here's the really cool thing. You can kind of do the same thing in the stock market. We don't call it stock insurance, but that's kind of what it is. What you're doing is you're using stock options to sell premium. In the same way that an insurance company sells insurance premiums, you can sell option premiums. And on the flip side of that, you're guaranteeing somebody the right to do something. But the guarantee for you is you get paid. You get paid up front. As soon as you execute that trade, that money comes into your account and you see it in the cash balance in your trading account immediately. The same way that State Farm or Allstate or Progressive or any of the insurance companies out there get to collect their premium, you can also collect premium. And that's yours to keep no matter what, whether there's an accident, whether there's not an accident, whether the trade goes the way you think it's going to go, or whether it doesn't go the way you think it's going to go. That's a guaranteed income. When you think about a casino, they don't win because of luck. They win because of math. They have a small edge and they use that over and over again. And they know the more they can run the play, the more they're going to make over time. You can do the same thing selling premium. You can have a small edge. And the more you do it over and over again, the more you're going to see your account go up over time. And here's the cool thing, the probabilities work themselves out. Let me show you what I'm talking about. So we're over here in TradingView and we're looking at Bank of America. Now the stock itself is irrelevant. This is the exact same on every stock and every crypto you will ever trade. But what I want you to understand is, let's assume for a moment that you decide to buy this trade. Now, in order for this trade to make money, when you buy it, it must go up, okay? And if it goes up, then you're going to make money. Now, there's just one problem. There's two more directions that the trade could go. It could not go up. Instead, it could go sideways. It could go nowhere. And if it goes nowhere, while you may not lose money, you're going to lose opportunity, right? And the other way that this trade could go is it could go down. And if it goes down, then unfortunately, you're going to lose. Now, if you've ever traded before, you know about the time you buy a trade, it seems like that trade is ready to go down. It's just kind of Murphy's Law of trading. So what if we flip the script? What if instead of saying we have to buy a stock and it has to go up, what if we said we really don't care? If it goes up, great. If it goes sideways, great. And if it comes down, we could deal with that too, because we have a plan for that. Let me show you what I'm talking about. If you did this trade and the trade has to go up, you can only make money in 1 out of 3 trade directions. But if you sell premium and you're selling somebody else an option on this, you're selling somebody else the right to sell you the stock, then if the trade goes up, great, no big deal. You keep all of your premium, everything's great. If the trade goes sideways, no big deal. You keep all your premium and everything's great. And if the trade comes down, well, guess what? You still get paid. Now, in the third situation, if the trade comes down, you may end up buying the stock, but you'll still be buying the stock and getting paid to do so. And you end up buying it for a lower cost basis than if you were to just buy it outright. That's a win-win-win situation. Now, 2 of these 3 situations, you are absolutely free and clear. It's like the insurance company selling you the premium every month, no big deal. In the third situation, we'll say you had a small claim. It's not exactly what it's called, but we'll just say you had a small claim. You can still actually turn around and make money with that. But the benefit is you already got paid up front. Now, if that doesn't sound exciting, then I don't know what's going to excite you. Now, this is just a quick example, but I want you to see what's possible whenever you trade this way. It's like you're going from being a gambler, hoping and wishing and playing with the lowest probabilities, to becoming the house, where you flip the script, where literally 2 out of 3 trades, you're free and clear. That's twice the odds in your favor. And even if the trade does go against you, you've got a mechanism that you can use to recollect any losses and continue to turn that trade into a profit. It's literally flipping the script from being the gambler to being the casino, to being the house, to collecting the gate fee at the amusement park, to collecting the premium at the insurance company. Pick whichever metaphor you want. You just have to ask yourself, how would I prefer to get paid? Would I prefer to buy a stock and hold and hope that it's going to go up? Or would I prefer to get paid up front and know for certain that amount of money is going to come into my account, and at the very least, I'm guaranteed to get that much right there. And if you think that the predictable income sounds exciting to you, let me tell you, it will forever change the way you approach trading. So if you're watching this and you're thinking, yeah, I want that. I want predictable income. I want to know how to get paid first before everybody else. You're really going to love my brand new accelerator course that I've called the Retirement Wheel. And this training program is going to give you everything that you need to start executing this strategy, selling your option premiums and getting paid up front so that you have predictable income. Here's what you're going to learn with this program. You're going to learn how to get paid first. You're going to learn how to trade for predictable cash flow. And then you can decide, how do you want to set it up? Do you want to get paid weekly? You want to get paid every 2 weeks? You want to get paid monthly? You get to design this strategy exactly like you want it to work. But here's the cool thing. You're going to end up earning between 1 and 3% per week. And I'm telling you, it is one of the easiest ways to make consistent profit with your trading account week after week, month after month, and ultimately year after year. Just imagine that you are collecting the gate fee at the amusement park. Just imagine that you're the casino. You flipped the house odds. You've got the edge in your favor. Imagine you're the insurance company. That's what you're doing with this strategy. And if that sounds exciting to you and you've gotten something from this video, guess what you need to do? You need to like and subscribe down below, because when you like and subscribe, you're going to have access to all the other videos. You get the little reminders of all the videos that we send out. More importantly, you'll be able to sign up for this program, the Retirement Wheel. Get yourself educated, get yourself trained on it, and start executing it in your own trades. All right. I hope you've gotten a lot from this, and I look forward to seeing you in some future videos. Be sure to like and subscribe. And until then, happy trading to all of you. We'll talk to you soon.